Good morning, good afternoon, good evening. Welcome to today's installment of the Ags Market Blast with myself and the amazing Angie Setzer. Let me just tell everyone it's live, and it's live. One sec. As usual, Angie, the great Angie, will do a rapid fire roundup of the latest pricing flows, market moving news for agricultural markets. And there she is. Yay! One sec, sending you the invite, my darling. One second, one second. It's floating your way over the Atlantic at the moment. Here she is.
Here I am, woohoo! Do you get the
Woohoo!
legals while I was
Oh yeah,
jumping
no,
over
yeah,
across?
no.
Look at you
I know
go.
that's a good point. Let's not mess it
Oh.
up. This is late in the year. Let me get it right now. Al. No, nothing. It's all falling apart at the end of the year. Nothing discussed in this spaces session constitute trading or investment advice or infers any kind of endorsement by PIQ Global Limited, Trainers PIQ or PIQ Speak, or indeed the hosts, which, as you know by now, is the amazing Angie Setzer, and myself, Ryan.
Yay! I think
Yay!
you're I think you're
Oh,
amazing, Ryan. So
stop
how's
it!
that?
Stop it!
Yeah,
Stop it!
so well, I'm glad to be here. Maybe. We'll see how the day goes. Because at the end of the day yesterday, I was like, of all of the things in my life I could have done, I could have been great at so many things, I feel like. Not because I'm
Absolutely.
cocky, just simply because like I'm willing to work really hard and do whatever it takes. You know what I mean? But like I could
Yeah.
have avoided trading commodities, especially grains. But nope, here I am. I'm here to party with all of you. So
Yeah.
yesterday obviously was a bad day for soybeans, and in the morning we had talked about it. I'd said that kind of the failure to break out above 10 had made me a little bit nervous. We had seen this market coiling up between 980 and 10. I kept telling my growers, like, we have 50 cents of upside, 50 cents of downside. Flip a coin on which one you think it is. And so the downside one apparently won. And so yesterday we were down 25 cents, and it was a whole combination of things. Like, basically, if you were to take and create a recipe for what would make a bearish soybean trade, you would have taken all of the factors that came into the market structure yesterday and been like, ta-da, here you go.
Yeah.
We've got some private estimates in Brazil and South America increasing. We'd seen some rainfall in Argentina that was welcome ahead of a dry spell. It's going to help them, or at least the idea is it'll help them, to kind of weather the drier weather. Haha. And so there was some thoughts there that the Brazilian crop's going to keep getting bigger, South American crop's going to keep getting bigger, but then you have this combination of the weak Brazilian currency that we've been talking about and some of the uncertainty over what the hell's going to happen, with Brazil from a fiscal standpoint as we move ahead. They're talking about interest rates working their way towards 16%. As they look out into next year, at the very least, they're saying 14% interest rates by March. You've got a bit of a battle between Lula and the central bank head, who is on his way out. He's gone in
Yeah.
2 weeks. So we'll see, what that means. But so in the mind of everyone, right, we're all talking about how the Brazilian farmer is going to be liquidating supplies because his currency is driving that, yada, 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 which is great on the front end. But the thing about farmers, the thing about anyone in physical grain trade is, like, you'll make an aggressive sale when a market transition takes place. Like the first time that the currency trades to a new record low, right, you're probably going to be somewhat aggressive because, woo, we've never been here before. This is converting us over into more dollars. Like, I'm going to be a seller here. Well, then the next day it does it again, and you're like, oh, okay, well, I'll hold off and see what happens. And a week later, you've seen the currency completely collapse, and your trade that you made a week ago isn't as great as what you thought it would be. And so what we're seeing right now amongst farmers selling, or at least from the view that I'm getting from the folks that I'm talking to down that way, is that it's not as aggressive. The farmer selling is not as aggressive as you would anticipate. And it's not surprising. We're 4 weeks, 5 weeks away from soybean harvest started. The safrinha crop hasn't even been planted yet. We're 3 months away from getting that planted. And so the push of bushels that we're anticipating is probably more, the anticipation is probably greater than what we'll actually see when we get there, similar to what we saw in the US. But like I said, all of these factors combined with the fact that we put year-round E15 into the continuing resolution, but did not extend the biofuel blenders credit, that was a bummer as well. And so
Right.
that
Yeah.
gave you yesterday. Like, here we are. Now we have to see what today brings. So I'll stop there and see if you've got
No, all
got
good.
any questions.
One interesting thing you mentioned. Sorry if it's a bit noisy in the background. One interesting thing you mentioned there about Brazil. Like, we've been going on about this now for a couple of weeks.
Mm-hmm.
You yourself picked up this very early that we're not going to claim to be experts in Brazilian economic affairs, but every day we seem to have more and more bad headlines coming out there. Like today's,
Yes.
like the CDS spreads popping out today as well. It does feel, and I was speaking to Michael Brown on this morning's Morning Blast, which is the more kind of general economic podcast that we do, and it's one of those that's like it feels to be flying under the radar somewhat because it's very easy for them to go, oh yes, it's just another South American country blowing up. But the
Hmm.
ramifications of this, because they are such a huge exporter of agricultural markets, of agricultural products, so you know it's one of those. It feels like it's not a problem until it's a massive problem if it does all
Yes.
kind of blow up. If that makes any sense.
100%. And that's the thing that we're looking at right now is like a lot of folks, like I said, their idea is well, economics 101, right? Like your weaker
Yeah,
your
exactly.
currency, the quicker you're going to sell into the market structure, the harder it's going to be for the US to compete and this, that, and the other thing, which is totally fine. But we have seen the influence of runaway inflation and weakening currency on farmer selling before, and you don't have to look any further than Argentina. And so if you think that a collapsing currency and rising interest rates will not impact, even with a 170 million metric ton crop. Now, granted, they're going to move some into the pipeline. That's not, like I'm not going to sit here and say, oh, they're going to put it all away. But like to be careful making assumptions about what's going to happen with grain flow
Yeah,
2-3 months out, but that's part of yesterday. And then one of the things that we do in grain, obviously it's a futures market, so we're talking about the things that are going to impact us in the future.
yeah,
But we just really need to watch because it is something that is millions of moving pieces. I feel like
yeah.
maybe not
This is it.
millions, but
Yeah,
a lot of moving pieces in what's happening in Brazil. And B, I had a conversation with a friend of mine yesterday who's a former cash trader who's in South America now and has a very level head. I enjoy talking to him about, different things that you're seeing. And he's like, we can forecast the impact of weather. We can forecast, what it looks like from a production standpoint. You cannot forecast human reaction to a situation you've never really
exactly,
experienced
exactly.
before. And so that's what's going to make this fun. And that's why, like, fine, you can say that beans are the most bearish thing in the world. And, like, obviously on paper they are, but I'd be really careful getting too wrapped up in this idea that they have to go to zero anytime soon because we could see some really interesting dynamics in this market that we've never really seen before that don't line up like we think they should simply because we have the geopolitical and the fiscal policies
Yeah,
or fiscal developments that could influence that.
yeah. Absolutely,
So
love it.
so yeah, on the back of that, dollar strength. Obviously, we traded to 2-year highs in the dollar yesterday, but we're seeing the dollar remain really strong. Wheat has been pressured as a result of it, but this week's export sales were pretty decent for wheat, on the higher end of trader expectations. And one of those things that I think we're going to see really start to play a role. So part of the pressure that we've seen in feed grains, and especially on the wheat market, it has been spillover from the dollar strength and the thought that the U.S. wheat supply is the most expensive or one of the more expensive wheat supplies in the world. And it is. But you also can basically pick any type of quality, any flavor of wheat that you want from the US, and you can get it next week. And so some of the stuff that we're seeing here with increased geopolitical uncertainty, increased uncertainty in what's going to move out of, Russia and the Black Sea, the EU's quality issues, and some of these other things, the dollar strength has weighed heavy on everything, but we're still seeing really solid export demand. And I think that's going to continue. And that's one of those things that we're going to struggle with because, dollar stronger, commodities weaker, right? But like, not necessarily so, or at the very least, we're not necessarily seeing the strength in the dollar discourage buying interest by other countries out there in the world.
Got you.
So that, yeah. And so just to kind of back up on that, export sales today, wheat, I said, was good. Corn was decent, up from last week. One thing that we did notice, we are seeing some switching over into countries from unknown. So unknown has been the biggest buyer, or at least the one that's been head and shoulders above the rest of the crowd when it comes to year over year advances. Unknown in corn was up almost 4.5 million metric tons versus a year ago. Pretty substantial gain. And we did see some switch over a tiny bit from unknown into Mexico, a decent chunk from unknown into Japan. We did see a chunk of unknown bushels get canceled as well, but I think that's part of the transition process there. But we're just going to continue to watch, what we see happen in the cash market, see if there's any continued buying interest, and see if the EU shows up. There's some quality issues over there that we're looking at that, that could be part of where we're seeing that unknown come into play. But I'd say
Well,
the export sales get last week were disappointing. This week, I wouldn't characterize them as that.
I know it's not obviously they're not going to be part of the unknown this time, but we were talking before the show earlier on about India potentially being an importer at
Yes,
some point.
for wheat. Yeah.
It's not, we're not saying it's happening now because they actually came out today and denied it. But there's nothing worse than when a government spokesperson denies something. Um, but
Yeah.
yeah, like you said, if the fact that we're even talking about India importing, it's quite a big one, right?
Yes. Yeah, and that's been on the subject. That's been on the radar. That's part of why wheat sold off a bit today. Is India came out and said, "Hey, we don't need your wheat right now."
Yeah, exactly. It
And
was
one of
it
the
was very much
things
a wink,
that
wink. Yet.
yeah, like we definitely don't need any of that wheat. Our domestic prices are going to stabilize just fine. And I'm like, asterisk, asterisk, with wheat imports. And so it'll be interesting to see. India doesn't harvest their crop until what, May. We'll see what their March weather looks like. That'll be super important. Some of these other things that you have going on. So maybe they are able to bring in and stabilize their domestic prices without some sort of disruption in production this coming spring. But India has been real interesting. Like the rest of the world's seen cheaper supplies. India has refused to import. They've cut the amount of stocks that commercials and folks can have on hand. Like you're limited to so much holding of wheat,
Oh right, okay.
and things like that. Like you can only have so much. Like they've done all of these things, and but the last thing they want to do is import. And Turkey's been the same way. Turkey is not importing wheat. China's not importing wheat. And so, like, if you see after the first of the year any one of those three come in, which China's probably not likely to, but any one of those three come in, and suddenly we're looking at a bit of a different ball game too, because we're
Well, it kind
limited.
of it kind of also that kind of ties in with what you were saying yesterday. It was like, some of these like small kind of changes. They used to be exporting 7 million bushels, now they're importing 5 million. Like, all these
Yeah.
little switcheroos kind of they really start adding up, right? So we could be in for a
Yes.
really interesting 2025.
Oh, we are definitely in for an interesting 2020. I think that is pretty much the only thing. Like, how I always said, if anyone talks in absolutes, whatever. But
Yeah,
like,
yeah,
I think
yeah.
2025, the only thing we can guarantee about it is it's going to be interesting.
Was
like
it may we
it's
live in interesting times?
Yeah, exactly. I don't know what I was wishing for when I wanted to do something different every day, but here we are. So, but yeah, it's going to be a fun time. Biggest thing I'm going to continue to reiterate is watch cash grain movement over and above everything else. There'll be a lot of
Right.
noise about a lot of things. A lot of people have a lot of opinions and they're very loud with them, and that's totally fine. We love opinions for sure, but like, just be paying attention to grain flow, spreads, basis, what you're seeing. And like, to me, the biggest question I always ask myself at any given moment, is it easier or harder to source supplies? And that should give you your answer as to whether or not things need to improve value wise or get
Yeah,
cheaper.
yeah. Perfect.
So that's it for today.
Oh,
Happy Thursday,
fantastic. Happy Thursday to
right?
you. And I guess, one, barring some major kind of thing over the next couple of weeks, I guess this might be potentially our penultimate show until 2025, maybe.
Yeah.
We'll
Yeah.
see.
It's what we
Well,
can do. We'll
obviously,
see. Yeah.
if it all kicks off, then obviously me and Angie are here for you.
Yeah, if
But
things
we'll
get
see.
crazy, you can rely on us. Otherwise, if
Exactly.
they don't, then we're busy. But yeah,
Exactly. Exactly. I'm
yeah,
busy eating cheese and chocolate, to be honest with you. But yeah,
one
there we
hundred
go.
percent, one
Right.
hundred. So
Angie, as always, thank you so much, my love. You are amazing. Thank you for all the work you do and all the insights you bring to the table. Listeners, again, we've only been doing this for a couple of months now, maybe a month or so. But the feedback we've been getting and the listeners, it's always rising. So thank you so much to yourselves. Look after yourselves, and we will see you tomorrow for potentially the last show of 2024. Have a good
woohoo! I'm
one.
ready. Thank you. Have a good
See you
one.
later. Bye.